Today I want to talk about crypto, which is doing stuff versus not doing stuff. That sounds stupid, but it could make a big difference in whether or not the particular crypto you've invested in is going to take off during, let's say, this bull run. In other words, in the next 6 to 12 months, assuming everything were to take off, as opposed to long term. Long term is different than the next 6 to 12 months. I'll explain in a second. This is Crypto for the Rest of Us. Tip, tool, coin analysis, 6 days a week. Thank you for watching. Big dumb animal. Don't do what I say. Informational purposes only. That's my disclaimer. So what do I mean? Doing stuff versus not doing stuff. Well, in other words, is it just hype or are they actually executing right now? Because if you consider as people move into this market and retail moves into the market, and if things start to take off, well, of course, things will be uncovered. Are the, let's say, real world asset or AI, those are the two categories I'm going to talk about. Real world assets as an example, a couple of them, and then artificial intelligence, a couple of them. And what I'm going to point out is there's a big difference, in my opinion, between those things that have actually done what they said they're going to do versus those just saying, here's what we intend to do. Because it's quite possible that those that intend to do something will do it, but maybe not during this bull run, and that's not going to look too good, in my opinion, to the retail investors that are coming in. Let's take a look at CoinMarketCap here. And if you're familiar, when you go to the main page, they've got some of the hot categories. You can go under categories, but there's many of them. But here we'll just jump into AI, very popular, and real-world assets. First, let's look at real-world assets. A couple things I want to point out here. As you scroll down, you might think Avalanche, Chainlink. There's a big difference between like a layer one or something that can allow or help to tokenize real world assets versus one of these cryptos or one of these companies that are specifically going after the tokenization of specific real world assets and doing it. So let's scroll down here. First thing I want to point out is see Maker, Ando. This drives me crazy, but market cap. Again, I've said this before, but market cap is current price times circulating coin. Okay, but first let's look at Maker. $2 billion, roughly speaking. That's their market cap. Current price times circulating supply. Okay, which is 930,000 of a max supply of 1 million. So it's almost everything's out. 92% is out. So they're fully diluted, which would be if everything's out times the price is 2 billion. Well, notice they're 2 billion, okay, because they have almost all their coins out. Here's Ando right underneath, but they're about 1 billion. They're worth half as much. Are they? If you look at Ando, circulating supply is only 9%. Okay, so they're actually fully diluted as 7 billion. So first of all, when you do your research and you're in a category and you're looking at something like market cap, realize you got to dig into fully diluted because I believe everyone's looking at fully diluted. They want to know tokenomics, what's going to happen. Okay, that's the first thing. Now we look at Maker. What is Maker? You're probably familiar with it. Well, Maker is the MakerDAO. It's a stable coin. Okay, well, to me, that's not quite tokenizing real world assets. I want to see that you've tokenized the deed on a home. You've tokenized the title to a car. You've tokenized, let's jump to Ando. What is Ando doing? Well, they're tokenizing treasuries. So if you were to look at, I'm just jumping into these to give you an idea. So when you do your own research, rwa.xyz, I've shown it before. It's phenomenal. They're trying to track all of the real world assets, who's tokenizing them, etc. I just already went ahead, jumped into treasuries, turned everyone off, just looked at OUSG because at the moment, Ando has two things. The OUSG, and then they have down here the USDY. OUSG is around 200 million at the moment, tokenizing treasuries. They were in 23 around 170 million. They took a dip. They're back up. And then when it comes to USDY, which is, so the USG is more for, institutional investing with treasuries. USDY is providing a return backed by treasuries, that's more retail. That's 340 million. So total, I believe, here you go. Ando market cap is 561 million in this treasury space. Okay. That's impressive, right? They've done it. They're not talking about doing it. They've actually done it. That's very important. Now, not to pick on anyone in this particular space, but if you scroll down here, there's actually one that I like. I like what they talk about doing quite a bit. I'm going pretty far down. Strike X, 27 millions there. Market cap, they're fully diluted, is 28 million because they've got a decent amount of their circulating supply out. It's pretty much almost everything. So it's only 28 million. That's nothing. Now, if you look at TradeStrike, you go to their site, you scroll down, they talk about what they want to do. They got a wallet, okay. Got a DeFi, decentralized exchange, DeFi exchange, okay. But this is what they really want to do. It's their trading platform, which actually, if you look into it, it's pretty cool, but it's under construction. All right. What are the odds that they're going to have this? And actually, it's, if you read into it and what they're doing, I like it a lot, but, I don't know if they're going to be able to finish this in time during the run. And if they don't, well, they might take advantage of the run up like everyone else, but are they really going to take off if they don't do it during this run? Maybe in the future. Anyway, so my point is when you're looking at things for this run, you want to look at some of these at the top, take a look at their actual market caps, but then dig in, what are they doing versus what they say they're going to do? Big difference. Not picking on either of those, just wanted to point them out. Okay, that's in the real world asset space. So now let's just jump into AI as an example, a very popular category. We go into AI, you'll see things at the top. We've got NEAR, we've got ICP, more of, the blockchain, allowing you to run things on the blockchain, but that's different than, say, Fetch, which is a customer facing solution. And then something like Render, which is totally different because that's providing the GPUs and the computing power. So let's look at a customer facing thing such as Fetch, and then we'll look at another one that I like. But if you jump in, Fetch, TCP/IP for AI agents, are making a whole infrastructure full of tools for people who want to create and deploy their AI agents really fast. Another one that's a little farther down, but they have also a customer-facing solution, PAL, P-A-A-L, another one that I like. If we jump into them, they're fully diluted. It's only 200 million. Okay, but what are they doing? They also have a customer-facing solution, their bot. And interestingly enough, I went ahead and did this. I asked their bot, what's the difference between Fetch and them? In summary, PAL focuses on AI-powered tools and services for the crypto industry. Fetch AI is more focused on creating a decentralized digital world where autonomous agents can perform economic work efficiently. Each project has its unique approach and target market. Okay, but what is interesting is I went pretty far down the list of AI in terms of market cap. PAL, which is one I've owned for a while now. Actually, I should say everything I'm talking about I own. But I went pretty far down the list, and look, they do have a bot. You can use their bot. You can get a custom bot. You can white label it. You can dig in more, but there you go. We went down the list on real world assets and found one that isn't doing anything yet, but they might. Who knows? In a short period of time, 6 to 12 months, not sure they're going to make it during this particular run or finish what they want to do during this run. That's not terrible. They might be around for a while and they might complete it, but it may not be able to take advantage of this bull run in terms of, 2x, 5x, 10x, 20x, whatever we think it might do. But on the other hand, AI dug down and found one that I've been watching for a while. And yes, they have executed on what they say they're going to execute on. And they're quite a low market cap. Anyway, not telling you to invest in any of them, but today's tip is make sure you know how to compare them. One, look at fully diluted market cap, but more importantly, look at what they're talking about doing. Have they done it? Or are they just talking about doing it? And how confident are you that in this short period of time, they may actually do it? If you've ever been in a technology company or run one, I used to be a programmer. I've had multiple companies myself. I've raised money for them. I've run development groups, and I can tell you that things always take much longer than you think they're going to take.